Hey, happy Friday to you. Welcome back to the channel. So I've been getting a lot of questions recently. People have said, Jimmy, is UGAS going to go back to $20? Or is UGAS going to go back to $18? A lot of different examples. People have been kind of holding the bag on a few positions and they want to know, are we going to get back to those highs? And my answer to all of them has been, I have no idea because we're not getting a cold shot of weather. We're not seeing any fluctuations to the upside. We're not getting any mass buying, any craziness that's hitting the market that's pushing it back to the upside like we saw last year. If you look at the charts and see all that flurry of activity that took place, we're just not seeing that this year. So what I want to do is share an article with you that I came across today that I know unfortunately says don't bet on natural gas rising back to previous highs. There's just a lot of issues going on, and I want to lay out 4 specific issues that are covered in this article for reasons why natural gas might not rebound this winter back to previous prices. So with that, let's jump in. So, natural gas prices are set to close this year down a whopping 25%. And the sentiment is that there's just not a lot of confidence in a rebound. So today I want to share 4 specific reasons why. Number 1, let's start off with record levels of production combined with mild temperatures have created a well-supplied U.S. gas market. Following last year's dwindling levels of natural gas, our inventories now, they've just shot back up to the 5-year average. And so we're essentially entering our winter months well supplied with natural gas. Reason number 2, which I wasn't fully aware of before, but I am now. Major investors are feeling a bit down on the probability of natural gas prices recovering, so hedge funds and other money managers have amassed the largest net short positions on natural gas futures since 2008. Now, this is according to the Wall Street Journal. This means that investors and speculators as a whole are betting that prices will continue to fall. Now, next we need to talk about investors pulling their money. Investors are pulling their money out of the sector and have closed the door on new capital injections. Now, what this means is that it's forcing spending cutbacks, which is already starting to translate into a production slowdown. The EIA is forecasting a decline in gas production in the Appalachian region by 74 million cubic feet per day in January. Now, gas production declines are also expected in the Anadarko Basin in Oklahoma and in the Eagle Ford in South Texas. Overall production for the country is still expected to rise due to the associated gas output still rising in the Permian Basin, however. So this is sort of a strange scenario and problem because total production is still at record levels while the industry is experiencing widespread financial problems. And lastly, global surplus is also a problem. Chevron shale gas in Appalachia is not as valuable as they once thought it was, and the write-down on its LNG liquefied natural gas project in Canada also reflects the souring of the global market for gas. Also, Asian spot prices for liquefied natural gas are at their lowest on record for this time of year. And Ion Energy Group told the Wall Street Journal that it would take a quote-unquote ice age winter to prevent a further price slide in natural gas. So all of these things combined are just creating a lot of negative sentiment around the product of natural gas, and it brings into question, will we be able to get that rebound? Right now, it's just not looking that way. I want to hear your opinions. Post them in the comments below. What do you think about this article? It's posted below as well, but I want to know, do you guys think it's going to rebound? What are your opinions? And give me some reasons why you think it's going to rebound if you do. If you think it's not going to rebound, do you agree with this article or do you have other opinions or other reasons for why it may not rebound? So with that, let's jump into today's price action because I'd like to always break down UGAS, DIGAS, and /NG just to kind of give you an update on what I think on the markets as they're trading today. So let's do that. All right, so we've got /NG. We're up on the daily chart and we had a green day. We're ending the day on /NG up. Looks like it's closing at that 2.329 or about 2.33. So we're continuing our pinball action that we talked about. We got the bump up, back down, back up, back down, back up. So we're just pinballing for a while. So as far as /NG goes, we're not really doing a whole lot of anything right now. So let's flip over. Let's look at our UGAS and let's see what it's got going on today. Again, price action in terms of an open versus close. Another small day of trading. I think that things are sort of on pause as this reverse split is coming up in terms of volume of people trading UGAS. Right now you can see a bunch of little dojis all over the place. And again, today we did gap up, which was good. That put a little bit of money back in some people's pockets, and then ultimately finished the day slightly on the red side. But we are still below this level that's been touched twice, once here and once here, kind of right in that probably 920 area that could act as overhead resistance and get rejected further. So if we continue with the lack of cold weather or the ice age winter, as that article said, we could stay below this resistance level. We'll have to kind of wait and see where that goes. And I want to flip over to DIGAS real quick and take a peek here. So DIGAS had the gap down, but then finished up with a slightly larger day, not quite a doji, but did have a slight green day right on top of this resistance level that we drew out a long time ago. And it looks like it's pinballing between its overhead resistance level and its underneath support zone. So a lot of pinballing action there as well. So not a whole lot to talk about today. I do want to know if you guys did take any profits or just take some size off the table into this gap to the upside. I know some people have been commenting and messaging me saying that they've been nibbling in the $8 region and also in the $8.50 region. So I want to hear how your trades are going and if you took a little profit moving further north. But again, what this article is making me feel like is that we might not see the return back up to the 20s. If I back out a little bit here and we look at where we were, so we had kind of a great run up. Well, that was in the summer going into September. We had a run up here. We got above 20. That was the first time. $23.95-ish in that area, $24. And then we had the big sort of sell-off. It stayed in this area, set up a nice support zone. And then as it started to work back up, we got into November. And I think that this day here specifically, the 1st of November, and then gapping to the 2nd, everybody was feeling like $1 million. We got right back up and tapped just over $20. And I think that there were a lot of people chasing the markets here and jumping in. And I think people got stuck holding the bag as we drifted back down. We got another curl to the upside, which we talked about how that could be a profit-taking zone because we could get rejected and go lower, which is what happened. So then we've just been falling. We've been constantly gapping down, and we're not seeing any curls or relief points where we can take a little size off or take a little profit on some shares that you bought at a cheaper price. It seems like we've just had a consistent fall to the downside, kind of in a tumbling type action, all the way down to $7.65, which is just crazy that we're that low right now. And now it's just doing a lot of nothing. So yes, it is tracking /NG. I did have somebody comment on the last video saying that buying and selling of ETFs and ETNs doesn't affect how they move. And I put a couple articles in that comment for that subscriber if you're watching this video, but it absolutely does. It does track /NG, UGAS and DIGAS tracks /NG, but the volume of buyers and sellers also influences price. And as you can see, with the announcement of this reverse split and some people may be feeling a little tense and with a little bit of anxiety about everything, we're getting a lot of nothing activity. If this tracked directly by /NG, 3 times /NG, then we would see moves that are reflective of those 3 times, and we're not right now. So the lack of some trading volume is influencing things right here, and you can see volume levels through here. All these candles, if you look at these close, it'll tell you really clean right here. We had volume bars that were up in the 46.18 million. We got up to 44. We got then up to 48. And then we got up to 55, and then after that we just sort of hung. And then look at this, it dropped down to 20, we got to 24, it peaked up a little bit, then right back down to 24s, and 21s, and we've just been staying a little bit lower. And reflective of that, we've been seeing a lot of doji action and not really a lot of gapping up and down in the last week or so, week and a half to 2 weeks. It's kind of been, we tumbled and now we're just setting up down here. And that reverse split stuff, I think, has got everybody pausing and hesitating a little bit and waiting for the 23rd because it's right around the corner. And then once that's done, I think we'll see a pickup in activity. I think volume will come back to UGAZ, and we'll see some more interaction with this ETN moving forward. So just for reference, let's hop over. Let's look at UNG. This is the ETF I've kind of been hot on lately. It's a one-time leveraged ETF, and it's a lot cleaner trading. It does have that time decay component because, but it's a very different time decay than a 3 times leveraged ETF. So I can put some articles in the description about what 3 times leverage means and how significant that can be in terms of decay. But for UNG, it trades a lot cleaner for me, and it also opens up and allows me the opportunity to trade options. If we open up the options chain, you can see in here that it has some great options opportunities in here. You know, there are viable opportunities with multiple strikes. It has $half strikes, which is really good. This is a very liquid product with typically a pretty tight market, typically a penny or two tight bid-ask spread, so a very tight market that's about a penny wide, 2 pennies wide, and makes it a very nice vehicle or product for trading natural gas futures, but not putting yourself at risk or having to worry about that significant time decay based on a 3 times leveraged ETF that resets each day. So UNG has kind of been my pick. I do have a couple positions on it. I have a position on it right now, which I think you may have just seen, set up for the January 24th expiration. I sold a put spread in here, and you can see right now, here's my position. I sold this $17 put, and I bought the $15.50 put. And then in my Tastyworks account, which if you'd like to open a Tasty account, there's a link in the description below. Click that link, sign up for an account, and fund it with $2,000. And taking trades will get a credit. And if we get enough credits, I have an exciting announcement for the channel. So there have been, I think, 23 to 27 accounts opened, but none have been funded yet. So if you've opened a Tasty Trade account and you think it looks good and you're ready, go fund those accounts. We'll get credits. It'll help out the channel, and then we can do something exciting for the trading community within taking trades. So let's jump back over to the charts real quick, and we can see we got the gap up on UNG today. We had a dump in the beginning and then a recovery, and I honestly thought we were going to go a little higher, and I was thinking I might be able to close out one of my options positions, but ultimately it just sort of sagged and didn't do a whole lot. So UNG holding tight right there, but a lot cleaner price action, a lot bigger moves. Things are kind of trading back and forth. There's not a lot of pausing and gapping and nothing happening like you're seeing in UNG. Like you're seeing in UGAS, sorry. If you look at UNG right here at the price action, and then I flip right over to UGAS, you can just see the difference. There's just a lot of nothing happening right now with UGAS. And I'm really excited to see what happens after the split, to see where the price goes to exactly, and because it'll be 10 times whatever the finishing price is at the close of the market on the 22nd. But I'm excited to see what happens in terms of people coming to the market and fluctuation in price action moving beyond that point past the 23rd. So we'll hang tight. We'll wait for that. Hope this was helpful. Hope everybody was green. I want all your questions in the comments section, and we'll see you next time.